Hi everybody, welcome to my website here. Today we're going to talk about merchandise purchases and how to journalize them, what we do with them. If you're working through the videos on my website, which is beckettaccounting.wordpress.com, then there was a section on merchandise sales where a merchandise company is selling products and maybe getting accounts receivable for those, etc., and how you do transactions for that. This time we're going to talk about what happens when a merchandise company buys things and how the transactions work that way. So you might go back and review merchandise sales, because some of the transactions are something kind of the reverse or the other perspective on merchandise sales transactions. Also, I want to point out that if you go to my website, the working papers for these problems are already there, and you don't have to fill in things like the names of account numbers in the general, or the names of accounts in the general ledger, or things like that. So you can go to this site and do that if you wish to. Alright, so I've got this merchandise purchases problem, and again we're going to journalize transactions and post them, and this is probably fairly familiar to you if you're working through an accounting book or an accounting class. And also you're going to record the transactions, and then we're going to prepare a schedule of accounts payable in this video sequence. So the first thing we're going to do is to journalize these transactions, and here are the transactions, May 1 through 15. Here's all the things that we have. Gene Simmons invested $300,000 in his new makeup shop, Kiss Makeup. We also have a chart of accounts here, and this will become useful later on. So I'm going to go ahead, and you should all recognize the general journal and how that works. And I'm going to make it so we can see both of these at the same time for my problem. I'm going to go to the transactions section, and then here's my general journal. I want to show you also what's going on here. I'm going to bring this down so that I can see both what's in the column, and also I can kind of scroll down through the document itself. So that's what's going on my screen. So we're going to start here with this May 1 transaction. Put in the date here. So this one here, he invested cash. It's going to be $300,000. And then he also, there's $300,000 in cash, and there's also going to be capital. You see here, which I call G. Simmons Capital. G. Simmons Capital. And make sure I got this all right. Yep. And let me go ahead also and do this. I'm going to get it so it does this automatically here. I'll just put it in money format. That'll work. We'll get dollar signs. Alright, my apologies. Back to the problem here. $300,000 in cash, $300,000 in G. Simmons Capital. And then I'm going to write a description down here. Invested in business. And of course this is just kind of a setup thing where I'm getting ready to do the transactions that actually deal with purchases. So here we go. Here's one of those. On May 3, here's my date, Gene Simmons bought $3,000 worth of makeup on account from Makeup Wholesalers Incorporated on terms 210 net 40. So again, what this means is that when I'm doing the description, I'll need to put in Makeup Wholesalers, and I'll need to include the terms as well. And just to review what those terms mean, there's a 2% discount if Gene Simmons pays within 10 days. And the entire amount is due in 40 days. And it's a good idea to know those terms so that when you're thinking about which bills you want to pay, you can think about those discounts. So here we go. This is on account. And this is also, we're going to use purchases for this. And again, on the income statement, it's going to look a little bit different than it did back when we had a different kind of company, when we were just doing service-based things. And later on, I'll show you how to do that. So purchases of $3,000, and then we're also going to have accounts payable. $3,000. And then we have to write a description. And then there's a lot to write in this description here. 210 net 40. So I'll just let this kind of slide across here. That doesn't look quite as neat, but it'll be alright. So there's the transaction on the third. Now we're going to do the fourth. On May 4, he bought $2,500 worth of makeup on account from Designer Looks. And this is going to be pretty much exactly the same thing. Which is, we start with purchases. Purchases. Debit of $2,500. And here we're going to have credit to accounts payable, $1,500. And then last we have the description. There. Almost got all that in the correct box. There. All right. So there's May 4th. Next, we're going to do May 6th. On May 6th, the merchandise arrived from Designer Looks, and Simmons found $400 worth of defective makeup. Designer Looks issued Simmons a credit memo. So last time we talked about, in the merchandise sales section, we talked about what a credit memo means. And I can show you that real quick here. On the other company's books, they have the accounts receivable. And from their perspective, this is Designer Looks. Designer Looks. Now, since this transaction took place, we owe them $2,500 worth of material. They call this a credit memo because in their this is called a credit memo because in their T account they're crediting $400, which means that we only owe them $21,000. That's going to be the ending balance in our portion of their accounts receivable account. So let me scroll that up. There's that. That's what a credit memo means. Of course, on our books, it does something a little bit different. So we've got effective merchandise, and he's issuing a credit memo. So what this is going to do is it's going to be debited to our accounts receivable, or rather our accounts payable account. Got this credit memo of $400. You can see here, while it's a credit memo, we're going to debit that account because that's how things work out in our accounts. And now here we've got a new account we're going to use. We're going to use purchase returns and allowances, which this is another of those contra contra accounts. It's a contra purchases account. So purchases is a debit. It works a lot like an expense. purchases, returns, and allowances then is a credit, and it's going up because we just returned stuff. Purchases, returns, and allowances. There's $400 there. Signer looks issued credit memo. So there's my note down there. Alright, that takes care of the transaction on the 6th. And we are now over halfway through our transactions. And I think I'll take a break, and then we'll do the last 3.